Welcome to the deep dive. Today we're plunging into AGMH. That's AGM Group Holdings Inc. And right off the bat, if you're interested in microcaps, you should know this one is flagged as super volatile. High risk, lots of noise. So who are they? AGMH bills itself as, well, a hybrid. Part technology, part fintech hardware. They're based in Hong Kong, founded 2015. They say they do hardware R&D, assembly, focusing on things like ASIC chips for blockchain, and crypto mining gear, plus some fintech software stuff.
Right, those ASIC chips are key, aren't they? Specialized processors really built for mining crypto. Our goal here is really to figure out what caused this huge recent stock spike and also, understand the compliance problems this company's been navigating just to stay afloat.
Okay, yeah, let's get into that volatility. It wasn't just a small move. We saw shares jump, like hundreds of percent. I think the figure was plus 185%, all triggered by a Form 6K filing, just a regulatory update.
And the key piece of info in that filing was about a sale. It basically confirmed, or maybe just reconfirmed, they sold off a subsidiary, Nanjing Luken Semiconductor, for about $57.45 million, which for a company this size is pretty significant cash.
But here's the twist, right? This is where it gets, interesting. That $57 million sale, it wasn't actually new information.
Not at all.
It was first announced way back on May 7th, 2025. Months ago.
Exactly. So filing a 6K, basically just reminding people of old news.
Feels a bit like poking the market, doesn't it? Stirring up speculation.
You could definitely see it that way. And it worked. I mean, look at the reaction. Trading volume just exploded. It went from an average of maybe 500,000 shares a day to something like 43.8 million shares changing hands. That's a massive surge.
Wow.
Yeah, it looks less like genuine reaction to new value and more like a pump fueled by recycled info. FOMO kicked in hard.
So, okay, the market went wild over old news. But let's step back. What was the situation before this spike? Because it wasn't all rosy. AGMH was actually one of the worst performers year-to-date before this.
That's right.
And they were seriously facing the threat of being delisted from the NASDAQ.
A very real risk. They were failing the minimum bid price rule.
Yeah.
Needing to stay above a bit $1 per share.
So what did they do? They pulled a pretty drastic move, a 50-for-1 reverse stock split. That took effect June 3rd, 2025.
Yeah, a 50-for-1 split is significant. It basically means they took every 50 shares investors held and squished them into one single share. It artificially boosts the price per share, purely a move to meet that NASDAQ $1 rule.
A technical fix, not a fundamental one.
Exactly. Often seen as a sign of weakness, maybe a last resort to stay listed. But to be fair, let's look quickly at the financials. The 2024 numbers weren't terrible. Sources show revenue around $32 million, and they actually turned a profit, about $3.1 million net income.
Okay.
And importantly, the balance sheet showed zero long-term debt.
So positive income, no long-term debt, but still needed that reverse split just to keep their listing.
That's the tension, isn't it? And think about the scale here. That subsidiary sale, the $57 million, that's almost double their entire annual revenue from 2024.
Ah, good point. So the excitement isn't about their core business growing.
It seems mostly tied to this one-off asset sale. Which brings us back to the risks. The sources really highlight a few key things. The ongoing risk of delisting if they slip up again. The highly speculative nature of the stock may be prone to manipulation.
And this reliance on old news to create huge spikes.
Right. It suggests the foundation for these price jumps is pretty thin.
So the big takeaway for you, listening, AGMH is a really clear example of how weird market mechanics can get, especially in these small, volatile stocks. Stale news repackaged in a filing can cause absolute fireworks.
Massive reversals, huge trading days, it shows how vulnerable some stocks are. But here's the provocative thought, maybe. What about the long game? Sustainability. That subsidiary sale is a one-time cash boost. The reverse split is a technical fix. How is AGMH actually going to grow its core business? The ASIC chips, the crypto hardware, the fintech stuff. Can those operations sustain the company and justify its value down the road? What happens when the only news left is, well, just the boring fundamental performance of the business itself? That'll be the real test. Something to keep watching, for sure.